For most of what you'll try to achieve in your life, people will tell you that it's a product of luck, hard work, building the right habits and behaviors, and maybe even being at the right place at the right time. But what if I told you that investing, at its most basic form, didn't involve any of that? What if I told you that you could actually make 8% per year on average with whatever money you have right now indefinitely? Would you do it? Hey, my name is Ian Richardson, and in this video I'm going to be talking to you about how to get started investing in the stock market and the types of things you should keep in mind when you do. Now, if you have absolutely no experience, and I'm talking about can't even spell the word stock.
Stock. S-T-O-N-K.
Then you're watching the right video. And if you're wondering if that 8% figure is a fantasy or some type of reality, the truth is you could actually do that. And it's not some number I just came up with out of thin air. In fact, over the last century, the stock market has returned on average 8% per year when adjusted for inflation. And when I say the stock market, I'm talking about something called the S&P 500. S&P stands for Standard & Poor's. It's just a company that basically put together this index, which tracks many of the United States companies that are profitable and influential, that span a really broad base of different sectors. So things like retail companies and transportation companies, energy companies, finance companies, and so forth, all combined in this one index that basically shows you how the market is doing. Now, you can invest in this. I'm going to show you how to do that today in a way that has the lowest fees associated with it, and is a way that is methodical and automated so that you're not getting involved from an emotional standpoint. And really the only risk that you have is market risk, which I'll talk more about today. Most of the world's population is in a position where they need to trade time for money, myself included. And this typically comes in the form of working a job. You work your job, they pay you money, life costs money, and the cycle continues. And what wealth means to me is a divorce from this cycle. When you have enough wealth, you have the option to be able to spend your time as you wish. And you can deploy capital in a way that propagates your worldview. Whether it's donating to an organization or founding your own, or, come on, man. You're ruining it. You're ruining my speech. And whether that's donating to an organization or founding your own company, or maybe funding a campaign, or much, much more, now you have the option to be able to influence change the way you want with your own money.
Get the money, and then let's get around a table and let's create new rules.
So now that we've talked about building wealth and how investing is important from that perspective and why building wealth at all is important, let's talk about why investing in index funds versus individual stocks is important when you're just getting started. So let me talk about a story about myself. I started investing when I was 16 years old. I was a junior in high school, and my dad had approached me about opening a custodian account with me. And I put in, $1,000 or something around that. That was a lot of money to me at the time, right? It felt like it was like $1 million altogether. And one day I was watching Jim Cramer on Mad Money with my dad. And if anybody's ever watched Jim Cramer, it's pretty crazy. It's like a game show, and it really is more exciting than the stock market should be.
It is time for the lightning round. Go to one of these in and
And not to rag on Jim Cramer, because I think that he does provide some valuable insights. But Jim Cramer had an episode one night where he talked about two companies for the 5 minutes that I was listening. One of which was Burger King, and the other of which was Sprint. Now, Burger King is something that I was familiar with. I've had the Whopper before, and it tasted good.
Ugh, what the hell is this?
I thought, you know what? Out of those two companies, Burger King seems like it's a little bit more relatable. And I know that Jim was talking about how Burger King was a good investment. So I went ahead and I invested in Burger King. Now, in the first 2 months here, I remember going to Brownstone with a few friends, and I was watching the markets, and this was about 2 months into it. And Burger King had moved, maybe 2% up. Meanwhile, Sprint's up 55% to 60% in the same time frame. And I'm looking at it, I'm like, this is so stupid. I can't believe I picked the wrong stock. And I got really emotional about it, and I thought, you know what? I'm gonna take my money out of Burger King. I'm gonna go put it into Sprint. And I went to do that. And then Sprint crashes from where it is all the way down to levels below that. So now I'm down like 25% initially. And I feel so stupid. I feel like I don't know anything. So anyways, 2 things to learn from my stories. Number 1, make sure that you are investing in things that you understand. And number 2, when you don't understand things, just invest in an index. And that's what I'm gonna walk you through today. If you have no background investing in the market, you can do this. You don't have to understand it really at all, because you're protected by the fact that the market over time will likely produce a good return for you. So let this be a good way to dip your toe in and kind of get the ball rolling in your investment journey. And so with that, we'll jump into more. Most people put off this very, very important part of investing called starting because of one of a few reasons. And trust me, I've been victim to these as well. And it's human nature to some extent. So what are these reasons? Number 1, they don't understand the market and they know it. Number 2, they want to time the market. Right now we're at an all-time high in 2021 of the market. And the problem with trying to time it is that maybe we go up 20% more from here before we drop 10%, right? So you could lose out on potential gains by not being involved at all. And really, if you don't understand, it's better just to get in slowly over time, and we'll talk about that more. Another one is people don't think 8% on average, once again, it's on average over time, is a lot of money when you haven't saved much yet, right? So maybe you have $1,000, 8% is $80 of that, right, per year. And maybe you're thinking, do I really want to spend my time trying to make $80 a year when I could just have that money accessible? And the truth is, more so than the $80 you're making, you're building the habit, right, over time. As you make more money, you're going to invest more money, and that habit's important to build. One of the biggest benefits that you have with investing is your time, right? So the earlier you start, the better off you will be, and the more consistent you are, the better off you will be, like most other things in life. People also say they don't have the time, and I'm telling you, literally, at the end of this video, it takes 5 minutes, and that's it, and then you can forget about it. It doesn't take that much. People also think it's gambling, and I get why. If you go to Wall Street Bets for like 15 minutes, you look at these people that are literally putting thousands of dollars on these crazy investments that typically won't pay off. And for the ones that do, the fact that they take that high risk to begin with in other ones, it also typically won't pay off. So it's like crazy. And the last one, maybe you just have some guy in your head that's saying this.
Don't do what you should do. Do what you want.
And all of these subtle but very real fears come together to form this indefinite cycle of procrastination. But what if I told you something else, right? Now that risk aversion aspect of yourself, there's not much you can change about that. But what if I told you that by not investing your money, it was losing value? In the same way that a loaf of bread in 1988 cost 59 cents, cost $1.54 in 2020, according to the US Bureau of Labor Statistics, in the future, bread will likely be even more expensive. And while a 95-cent change over 32 years might not seem like much, think about it in terms of percentages. That's a 161% change over a 32-year period. Imagine everything becoming 161% more expensive in 32 years. And meanwhile, you have your money in a savings account that's making 0.01% interest right now. Not a great combination, right? And this phenomenon is called inflation. It's this idea that your purchasing power will diminish over time per dollar. Typically, inflation is around 2% per year, which means that every year you're not investing your money, you're losing 2% in value. So for $1,000, that's $20 of value that you've lost in purchasing power. And 2020 was a crazy year for money. Jerome Powell, who is the chairman of the Fed, printed quite a bit of it. And it's likely that we're going to see some inflation over time as a result. So now that we understand inflation, now that we understand why building wealth is important in order to be able to represent your worldview and have your time back, how do we get started? So in this next section, I'm going to go talk to you about how you can get started investing, how you can automate this based off of however much money you have. But before we do that, one last thing. If you don't have an emergency fund, if you don't have enough money saved up to do this, it's okay. Focus on that first. An emergency fund should be able to sustain you for 3 months without work or anything like that, given the current overhead that you have in your life. And start there, and once you can save money beyond that, then open a brokerage account, then start trying to save money and invest it in the stock market. But for everybody else, let's get started. Today we're going to be talking about a brokerage called M1 Finance. Now the brokerage you use doesn't matter all that much. In fact, depending on where you are in the world, you could just say India no fee brokerage, for example, if you're from India. And it will list you, good brokerages that you could use as well. Now make sure that there's no fees. Most brokerages today for simple stock investing will have no fees associated with the trades themselves. But just confirm that for yourself. M1 Finance doesn't have any fees. Robinhood doesn't have any fees. Today we're going to be using M1 Finance, and I actually don't even have an account here, so we're going to sign up for it. M1 Finance. So it says right at the top here, no fee investing, and we're going to go ahead and get started. Now, once we get here, it's going to ask us to add an email, and a password, and then you sign up now. We'll go ahead and confirm our email address. I'm gonna do that on a different window over here. Now, once you verify your email, you can come back here, hit on continue. So it talks about what a pie is. Pies are building blocks to organize and manage your portfolio. And today we're gonna be building a very simple pie. It's just gonna be buying the S&P 500, and it's gonna do it every time you invest money. Now, in this, you can create pies, however you wish. If you just search here instead for VOO, which is the Vanguard S&P 500 ETF, it's gonna give you exactly that. All right, you created your first pie. You would have doubled your money with this pie in 5 years. You use this pie like this to create a custom investment portfolio. M1's intelligent automation will help you make investing easier than ever. We've saved this pie for you if you don't want to add in portfolio. Awesome. All right, cool. So now we're gonna go ahead and verify our identity. Pretty straightforward. We're just gonna add our phone number here. Oh yeah, and my confirmation code is actually gonna be on I'm filming this with my iPhone. It's brutal. 620283. All right, so as we open this, it's gonna ask us questions about ourselves. We can go ahead and fill those out. Address. All right, investment profile. What is your approximate annual income? You fill this out. Worth, liquid net worth, social security number. Any of these apply. Per federal regulations, we're required to ask you the disclosures. Am I affiliated to work or broker dealer? No. None of them apply. Typically, this will be none for all. Everything will look okay, and then we go ahead and confirm. And now we fund our account. I think there's some pretty cool features to M1 Finance. Now the first here is, if we were to zoom in a little bit over this way, in Auto Invest, you can turn on Auto Invest to automatically invest all of your cash. Trading will be initiated once you have at least $25. So you literally could have a minimum of $25 and it will invest you in a pie. So what's cool about this is, let's imagine you had a automatic deposit that was set weekly for $25, right? It'll automatically go in here and it will invest it into your pies as you specify. Now, one of the other things that I was asked was, Ian, I don't want to invest in the S&P 500, and there's a few reasons. One of which is the PE ratio is at an all-time high, and that makes sense. I understand what you're saying. And the PE ratio, for those that don't know, is price to earnings ratio. It's basically looking at all of those companies in the S&P 500 index. What is their price of the stock over their forward earnings, which means that is the price expensive over the earnings that they're putting out. And to some extent, I think a portion of that is due to retail investors that have been trading in the markets more than ever before, which is good, which is actually, I think, a good thing, but there's a premium, I think, there. There's a little bit of a buoy, if you will, holding up the markets from that perspective. Now, the truth of the matter is that you, me, the lead investor at Goldman Sachs, none of us know whether there's gonna be a crash coming up in the immediate future.
Nobody. I don't care if you're Warren Buffett or if you're Jimmy Buffett, nobody knows if the stock is going to go up, down, sideways, or in circles.
When you're investing in the S&P 500, that is the only risk that you have. It's called systematic risk. And what that means is that basically, if the market crashes, then your investment will go down. But if one stock goes bankrupt, or if a sector maybe has a bad day, because you're diversified, because you have exposure to all these different sectors, and a lot of those companies also have exposure internationally, you're very well balanced from that perspective. Now, what's the antidote for a potential crash coming up? It's spreading out your investments. So let's imagine you have $1,000 to invest today, right? Instead of investing all $1,000, maybe you do it over the next 12 months if you're that nervous about it. And you can add $100 here, $100 there, or if you make it a consistent thing, as you get your paycheck, you invest a certain amount into M1 Finance or whatever the brokerage is that you're using, right? Because it doesn't matter whatever it is. And that will, over time, it's gonna dollar cost average whether the market's going up, down, sideways, whatever it is. And the idea is that if you're doing this passively and you don't want to think about it, then don't think about it, right? I mean, just get yourself started in that process. And if you want to learn more about the markets and how you can make better investing decisions going forward, and maybe how you can buy individual stocks that you think are better suited to do well, then do that and subscribe to this channel, because we'll be talking more about how to do that type of valuation and actually make those types of investment decisions and different ways that you can go about investing with different strategies in the future. But with that being said, there's also simple things that you can do in M1 Finance that makes the initial step in investing pretty approachable. So one of the things you can do is go into research, and in research they have market news, stocks, funds, my pies, and something called expert pies. And when you jump into expert pies, it's going to give you examples of general investing, plan for retirement, responsible investing, which I actually got a question about, which was how do you make sound financial options for the socially responsible investor, someone that doesn't want to invest in like an ExxonMobil, for example, because of the effects that has on the environment. So you can go ahead and click on this, and it's going to give you basically two pies here, international responsible investing and responsible investing, which is probably domestic. And one has 7 holdings, one has 5. We'll click on responsible investing. This is 5 holdings. It looks like they're all Nuveen. It's basically promoting ESG funds here. The expense ratio is also here for you, so you can get a sense of how much money you're paying per year to have this type of a diversification and management across these different ESG type companies. Now go into the portfolio once again, and I'm gonna add a different pie here. And in this pie, we're just gonna make one VOO stock and add to the basket. So we'll remove that. Now we just have our VOO basket. We'll call this S&P 500. Don't really need a description. We'll save it. And now literally as soon as you invest money, it's gonna go directly into the S&P. They'll buy fractional shares of VOO whenever necessary. And that's it. It's completely automated for you. And so what's really, really awesome about this is you don't have to think about it, but it now gets you exposed to a platform where you have skin in the game, you have money in the game, and you also have the option to be able to research other things and learn from that as well. So this is a good place to start, but if you're interested in learning more on this journey, I do recommend subscribe to this channel, continue to educate yourself, but also look to learn from other people, right? There's a bunch of great YouTubers on this platform. There's great books out there that I'll recommend over time. But this is definitely a good place to start. As you fund your account, make sure that you have a very simple pie that it's going out and investing into. And this will be a way to start to learn how to trade in the stock market. So with that, I appreciate all the time today that you've given me, and I hope this was valuable for you. If you'd like to use M1 Finance, I do have a link in the description that will give you $30 as well as myself. And like I said, I think it's a great way to get started with investing. This whole pie idea, I think, makes it very visual and easy to learn about how you can compose a portfolio. And with that, hope you enjoyed this. Leave a comment below if there's other types of topics you're interested in the future. And I look forward to talking to you next week. Peace.